Hey YouTube, here is another Bitcoin update for you guys. Just going to talk about Bitcoin in this, not really going to talk about alts or any other pairs for this video. So like always, we are going to do a top-down approach. So we're going to start off with the weekly, and then we'll move to the daily, and then we'll go to the 4-hour, and then finalize with the 1-hour, but we will mainly be sticking to the weekly, daily, and 4-hour time frames. So since the last video, we have seen the price stick around the $6,800 zone up to the around $77-ish $100 zone right around here. And the price is below this key zone of around $78,600, but we are hovering above a level of support here created with a projection. Here's our anchor point with a type A, and then we see another type A with 2 wicks touching that zone. And then again, same thing, we have 2 wicks touching that zone, and then we have one more touch before the support gets tested again right around back in November and December, where we broke down and then we got bought up from the demand there. So we do know that there is a support here, there is a level of demand where people are buying. Now looking closer at the price action and the weekly candles, we do see there is a tremendous amount of buy volume coming in from around this area, which is right around here. Around 69.7K, we could increase that a little bit more because we see the wicks protruding out of this zone. We see this candle right here with a wick coming down, falling around 7%-ish, but it came right back up and it actually closed much higher than the open, and it went even up to the key level of support right here. So in that one candle, there was a lot of movement in price. The price opened here, came all the way down to the recent low, and then it pushed above the open and then closed much higher than the actual open, which was pretty bullish. We did get a significant amount of buy volume coming in that time as well, indicating volume accumulation. So the next candle, we did see a bit of a doji, and then we saw the bears try to push it down because the resistance was respected oh so well here. Here's a key level of support, and then a new resistance. So this is that head and shoulders that we've been talking about for a while. Let's just zoom it up a little bit more. We see the first shoulder get created right here. This is the left shoulder, and this is the head. And then we have the right shoulder appear before dumping below the breakout point, the neckline right here. And then we held the zone, retested, and I was definitely looking a little bit more short, especially after this doji and when we started to see the price reject from the $7,600 zones right around here. And a good risk reward could be around there. Obviously, we're not going to take the trade on the weekly, but this is kind of where I was looking, where the potential take profit could have been around the 6K zone. Let's just zoom that out all the way. So that was the potential trade that we could have taken, and we did place some shorts here. Unfortunately, did not go all the way to the 6K zone, obviously, but we did cut our losses and put our stop losses and take profit, so we were able to manage and get a little bit of the profit. We were not able to actually hit the final take profit zone. So since then, this candle was a big shift in trend because we can zoom up a little bit here. We did see that the price did open right here and then tried to push all the way down, and it ended up going all the way to the 64s and 64.15-ish range, depending on the exchange you're using. But that was a huge push to the downside. Now, we were definitely expecting it to continue somewhat similar to what happened here, at least to this zone here, because of the larger price action pattern pushing the price down. We got a push, a correction, and then a push to our key level of support, which looking back at the bigger time frames, we can see that it was a key level of support. It was the first huge respect of a support, and then it was a massive rejection from the demand. And then we see that all along here, the buyers were not able to actually hold it in then, but in this area, they had confidence. They had the 6K zone as a key level of support when the price came back and tried to bounce closer and closer. So like we said before, when the price does get to a trend line and it tries to test it over and over again, the more likely it will break, and that's exactly what we saw here. We saw the price bounce very strongly, but as the price got squeezed closer together, as the price squeezed closer, we saw the price test the support more and more, and it just could not hold. The bears had more confidence than the bulls, and we got a massive break to the downside, and that's where the huge bear market to around $3,200 was. Now, in this situation, we don't have the respect yet that we're looking for in order to assume that we're going to have a push to the downside, but there is right now a strong level of buy volume looking at the price action because of the huge wicks protruding below the bodies of the candles. Now, also something to consider is obviously the volume right here. Different exchanges have different volumes, so you have to look at multiple exchanges, not just a single exchange. But looking just at the Coinbase exchange, we see that there is a significant amount of buy volume coming in when we do see those big pushes to the upside compared to the pullbacks or the rejections from the resistance zone, which is around 7,700. Now, looking at the two key zones here, we see the horizontal zone as well as the ascending zone right here. This is squeezing the price closer together. Now, add in the zone that we've been talking about for a very long time, the descending projection zone. We are getting a squeezing of the price to our apex zone, which is right around here. So that is the point where the price is going to have to make a decision. Obviously, we can go a little bit further down, somewhere around here or somewhere around here, but we're looking for the price to make a key shift on the bigger time frame. So this is the weekly, and this is really the biggest time frame that we're using because we don't really go to the monthly that often. But we do look at the weekly very often, week after week, in order to look at the macro picture of the chart. And this is what it's telling us, is the price is getting squeezed closer together towards the apex. We have an ascending support with lots of buy volume coming in. Look at those wicks, look at the volume, and we're also seeing a key descending zone that has been respected multiple times. This is the anchor point right here back in June of this summer, and then we saw the first rejection. The second rejection here, we can look at the daily, but on the weekly, we are just connecting the higher lows here. And then the massive rejection that really signified the strength of the downtrend is this zone right here. We saw a huge move, a max of 40% from the low to the high. And then we saw the massive rejection of sellers, and the bulls just could not push the price above the zone. We can check on the daily. We got a push, breaking a small support, a retest, validating as a new resistance, and then a massive dump, breaking the key level of 7,800 that we've been holding since around June of 2019. And then we've been holding below it ever since. So we are in a tight consolidation from around $7,700 to around $6,500. We could break this zone. My key level that I'm really going to be looking at is the around $6K, $5,800 zone, but I do just want to make sure that everyone knows that I'm looking at the projection zone, the ascending projection zone as well. But the key zones that we're looking to break in terms of the upside is going to be first the descending zone, which is going to be this guy right here connecting the lower highs, as well as the horizontal zone around the $7,800 zone, which was a previous left shoulder, right shoulder, neckline. It's a breakout zone, and then once we're able to get above it, I'm going to be looking very, very bullish. I am going to be looking for longs because this is a zone of confluence right here, where not only the descending zone is our key level of resistance, but also our horizontal zone, which is another level of resistance. And if we're able to actually break above it, we will be looking phenomenal for those long entries. We can see this is very, very well respected. We do have another line connecting this zone over here, which we can get into, where we see the type A, where it's just the closure of the candle there, and then we see price respecting there. It was used as a support, and it could be used now as a resistance. And we won't talk about it too much because the main zones we want to be looking at is going to be the descending zone and the horizontal zone around the $7,800 area. So that is the key level that I'm going to be looking at. The price could easily, just consolidate closer to that until it has to make a decision. Like we said before, it is a funnel pushing the price in both directions. You're getting a push from the demand, from the bulls to the upside, and then you're getting a sell-off from the bears, pushing the price to the downside, and the price has to make a decision, and whichever the decision is, we will trade it. We're traders. We're looking for volatility. Yes, it would be ideal if it went up for our long-term holds and investments, but for day-to-day swing trading, day trading, all that stuff, we don't need the price to go up to make money, and that's what's awesome about trading. So keeping in mind our key level of resistance and our support, let's now jump to the daily and look at the smaller granular details that the data is providing. So just to go over the key levels of supply and demand again, we have our key level of resistance. I did put, this is a actual price line. We don't need that. So I put 3 resistances because the resistance zone is pretty big. We can see that the top of it is going to be right around here where we got the hold and then a push up. And then the lowest part is going to be around here. So we did encompass both of those in our 3 resistance lines. We have our support right here. We have our previous support down here, and then we have some supports in the middle throughout the chart over in the spring and summer of this year. So I did put a pretty big zone there, but that's just going to signify how strong the resistance is that I'm able to see. Now we can see here the descending zone is closer than the weekly compared to the weekly on the daily, but that's because we can just see the detail a little bit more clear. Now this is that zone that we were talking about on the weekly chart. If we get our mighty trend line and then use that same anchor point and just draw a line connecting the previous resistance, connecting the wick here, turns into a support. Support could not hold the support. Broke, retested, and had a huge impulse move to the downside. That is a zone that is also being used as a potential resistance right now. So I wouldn't be surprised if we did see another dump around to the $66, $65, maybe even $6,700 zone right around here on the Gemini exchange. Obviously, each exchange is different, but I would not be surprised if that was the case. And on the 4-hour, we will look at this ascending support right around here. So we're getting another smaller squeeze of the price, and we'll just make this green. And I would not be surprised, because there is so much more sell pressure, to retest this 65, 66-ish zone one more time. We will get into more detail on this price action on the 4-hour, but let's just take a bit of a bigger look on the daily and zoom out just for a little bit. So looking at not just the little movement here, but looking at the bigger picture of the price action, I think if we do in fact actually break the previous low, which is going to be around the 66, 65, we will have a very, very strong support at the 58 to 6K range right around here. We can see on this daily as well, we can see that it was first a key level of support, key level of support, key level of support, and once it broke, all confidence was lost from the bulls, shifting the trend from horizontal or in consolidation into a major downtrend, with the bears completely in control, taking confidence. So we can see, because of that zone previously used as a key level of demand, we can assume that that's going to be a key level of demand again. Now, does that mean if the price breaks to the downside, we're just going to set buy orders at the 6K zone? Definitely not. Yes, you might be able to catch a wick like this, but for me, I like to have validation before I enter the market, so I have a higher probability of being right. That's not to say that we will never ever try to put a feeler trade in to try to catch a key level of support bounce, but putting in your full 2% risk on this very, very sketchy trade, I don't think is a very, very thought out strategy. Obviously, everyone trades differently, but that's not the plan here. We want to be looking for at least some level of confirmation that the price is going to shift in the opposite direction, meaning it's going from down to now up. Looking at the risk reward downside to upside, we don't have a tremendous amount of risk reward to the downside, although this is quite a bit if it does break this key level of support. But talking about the small support right here, we don't have a huge amount of reward that we could be taking, 8-9%, which is pretty significant, but looking at the potential upside when we do break this zone is very, very significant. So let's say we break here, or we consolidate around here for a little while. What we're wanting for the upside potential is a break in our zone of confluence, which is around here. We see that key level of resistance, key level of support, key level of support. This is going to be a key level of resistance. Until we break it, we're looking to be very, very cautious on our longs in the market. Because unless we're down here, we don't have a lot of movement. Like if we're longing right here, look how much resistance we have. That's not a very good risk reward unless you're trading on a very small time frame. So once we do break this support, inevitably we could break down and then come back all the way up. I don't exactly know, but when we do break this key level confluence zone, we are going to look for an exhaustion phase, a pullback, to retest the new support and validate it, so we can assume that it is going to be a strong level of demand that buyers are going to be lining up if in case we do get another pullback, and there's going to be the same level, if not more, buyers coming in and stepping up and buying the pair to keep it at the same level, if not push it up higher, causing us long and bullish investors and traders to make money. A risk reward in that situation would be very, very favorable. So let's say we get a push breaking our key level of confluence and we get a pullback. Some level of pullback. We will have to look at the smaller time frames, but it could be around here, could be around here. I don't exactly know. There's a long way until that actually occurs, so lots of price action can come into play before this actually happens, but this is the overall idea of what we're looking for. We're looking for, once the price breaks a very, very significant zone on a chart, it has to breathe, it has to correct, right? It can't go on forever, and there's been cases where, yes, like for example, right here, once it broke this very key level, look how strong of a level this was, and it never pulled back to retest this zone. That's why we put feeler trades on before the pullback sometimes, and then put a wider stop loss, so then if this situation never happens, we still have some exposure to the upside because we knew this was a key zone. Look at this trade right here. Yes, you could put it on this zone, but I had my long-term projection covering that zone because we had a lot of tests of the support here. So this was the situation that we were looking at. Once it broke this zone, this is an ascending triangle. It's a pretty solid pattern. We got a massive amount of buy volume coming in. If you're looking at the daily and looking for a pullback, it will never occur. Even on the 4 hour, it was massively pumping to the upside. There might never be a pullback, and that's just the risk that you have to take if you are only waiting to enter on a pullback. We like to enter a feeler position, allowing us to gain some level exposure in the market until we see a pullback. Then we enter the rest of our amount and then really, really look for the validation of a support or resistance, whatever we're doing. So a feeler trades like 10%, 5%, 20%, whatever the case may be, depends on your risk parameters, but having some level of exposure on a very, very high probability setup. So once we get a pullback, the risk reward is going to be pretty phenomenal. So if we do enter here, let's say we're going to encompass all the supports here, and we have a risk of, let's say, 5%. Our first take profit will probably be around the 96, 95 zone, all the way up here, if not a little bit lower, but we also want to assume that our risk reward at least is going to be 2. That is the minimum amount of risk reward that we're willing to take, right? So if we look right here, that is going to be the first level of take profit. I wouldn't take profit anything before that. We see a key level of resistance, support, resistance, and then we see another level of resistance and support. If we just hover our cursor over it, you can see that as well. So the minimum amount of risk reward is going to be around 2.6, 2.7, and then if we get to our key level is going to be 4.3, 4.4. We obviously don't exactly know what the risk is going to be, but just looking at simple risk reward, it's looking really solid. Now, I do think if we do break this zone, we are going to go very, very upward in movement pretty significantly, because we've been pushed down from the sellers basically from the middle of this year, June, July, somewhere around there. And looking back at the bigger time frames, we can assume and be safe to say that Bitcoin is very bullish. We saw the massive correction in 2018, and we're gaining significant traction now. But like anything, we have to have pullbacks. This is unsustainable. It climbed like some crazy amount, 300% in 154 days. That is unsustainable. It has to correct, but I do think the correction is coming very, very close to an end. We can see just on the weekly, looking at the historic corrections that have occurred, we can see they haven't lasted as long as this huge correction here. Now, this is a bear market, but I think at this point we are in a bullish market in a correction. Now, we can talk about 200-day EMAs and all that stuff, but just look at the actual chart. Actually, let's pull up BLX. So this is BLX, brave new coin. It is the longest chart of BTC we have, and we can easily see that this does not look very significant compared to what else we've been seeing in the past. Look at this correction here. Look at massive correction, massive correction. So in terms of duration, it's not so bad. And let's just look at the arced support that we've been drawing for quite a while on the Discord here. This is the anchor point right at the start of October 4th. And then we'll just loop this all the way up here. Takes a little bit of maneuvering in order to get the right fit. But once it does, you will be able to see how precise this is. So it's a little bit off here, but it's looking pretty good. We see touch points all along here. We see a touch point here. And look at that precision. And then if we get a descending zone pushing the price around here, we can see that on the bigger time frames, we are getting a massive squeeze, right? We see all along here, we've gotten squeezes in the past. We see descending zones, we see descending zones, horizontal zones. This is a horizontal zone right here where it's a squeeze from the higher lows to the horizontal resistance. We get a push, we get a correction to validate it as a new support, and then we get a massive move to the upside. Same thing happened here. We got a move to the upside. We needed a correction. Same thing happened here. Massive move up. Needed a correction. The correction in this situation was still creating higher lows. In our correction, it's creating lower highs and lower lows. So it's looking a lot more bearish. But it's making a funnel for the price to have to make a decision. And what do you think is the highest probability chance in this situation? Do you think it's going to break the support that's been held basically since 2010? If we look back all the way, or do you think it's finally going to break this from this small incremental descending trend line? My bet is going to be the price holding this key level of support and breaking to the upside. Now, this doesn't mean that there is an imminent bull run coming into play, but with the halving coming into play, with the price finally bouncing off this zone, there's a lot of things, a lot of institutions backed with CME futures that have been open since 2018. There's a lot of institutional money hovering around looking at BTC as a form of a trade, lucrative opportunity both for investors and traders. So in my opinion, I think we have basically hit almost the bottom. Now, like we talked about on the weekly chart or daily chart for BTC, we could see another push to the downside. That's not a problem, but what I'm looking for is on the weekly at BLX or on the Coinbase, whatever you're using, we're looking for a hold around this zone. And then the key zone that we want to see is a break in the descending zone right connecting the lower highs. That is the final zone that we want to break in order to shift our trend from a descending zone to at least a sideways and then slowly incrementally moving up towards the all-time high of 20K. Now, once we break this down very well, we could have a pullback like we saw here. We saw a push, pullback validating it as a new support, and then a move to the upside. It has to pull back because the market needs to take a breath. Once you run, let's say, a kilometer as fast as you can, breaking your barriers, you're going to have to take a break for a minute. You're going to have to catch your breath. And that's what the market needs to do as well. Once it breaks a very key level of either resistance or support, that's your barrier. You've broken a new time. You've gived it your all, pushed past the key zone that is forcing you to, stay in the same trend or same situation. Once you break that zone, you need to take a breath and go, wow, that was difficult. Now let's take a moment to rest and ramp up and push again, keeping us in the same trajectory that we were seeing before. And in this situation, I think that's what will happen again. We will see a push to the upside, breaking your very key zone. What does the market need to do? Pull back, validate this zone. It is a zone of confluence from the descending zone and from the arc support. And then we will start to see the buy volume come in. Now, this is perfectly looking in line as the actual BTC halving. We see that this zone, the confluence zone where we're going to pull back and retest, is actually around March, somewhere around there. And looking at the Bitcoin block reward halving countdown, we see that it's 14th of May 2020. So looking back at this, if the confluence zone is going to be around March of 2020 and the BTC halving is going to be in May 14th, which is just around there, it is a very, very close window. And like we saw here, we could start to see the bulls trekking up, breaking resistances, holding supports, and that's when the altcoin market will absolutely explode. When there is a lack of confidence in Bitcoin, there's a major lack of confidence in the alts, because Bitcoin is basically the face of crypto at this moment. Now, I know there are big players coming into it, Ripple, Ethereum, all these key players who have different use cases and provide different alternatives and services to companies, to individuals, and anything in between. But as of now, the general population, and even in the cryptocurrency space, Bitcoin is the pair to follow. So once we see the demand and the confidence come back from the bulls in Bitcoin, we will definitely start to see a huge amount of buy pressure in the alts, in my opinion. And looking at the chart and the macro picture on the bigger time frame, it's looking like it could perfectly come into play right in front of our eyes. So not going to talk about the macro view too much anymore. I hope you have a really good understanding of how critical of a point we are at. It's looking like if we do break the zone, man, it will be looking absolutely phenomenal. And like always, I will be keeping you guys updated on what's happening with the bigger term picture of things. We do sometimes get stuck into a grid of looking at the hour chart, 4-hour chart, 15-minute, especially if we're day trading. And it's very, very pertinent that we take a step back, look at the weekly, even look at the monthly sometimes, and really analyze where we are. Look at the monthly. Look how perfect this support has been respected. What's your guess? Is it going to hold this little tiny descending trend line, or it's going to hold like here that we've seen all the way through until we start to see a lot of demand come into the pair and into the market? I'm going to bet that it's going to hold this zone. I don't know about you, but that's what I'm preparing for. So all the way from the monthly, looking now at the daily, talking about what we looked at. So like I said before, we have a ascending support right here, and the price could break this zone, retesting the 65 zone again. That would be a really, really potential great long as a feeler trade with a stop loss just below this zone. It is pretty large of a stop loss, I know, 15%, but let's say you put 10% of your actual risk in it, you would be only risking 1.5% instead of 15. So you got to look at it in terms of risk on the total portfolio. You're not going to be putting in the same amount of money on each trade. If you do, you really got to get some help. That is definitely not going to last very long. You have to be able to have money management mastered in order to trade both intraday and swing trade in really any market. So let's talk now about the 4-hour. We talked about the bigger picture long enough, and let's break the more granular detail down and see what we could potentially see happen in the near future. So this is the 4-hour, and this is that ascending support that we were talking about. We see that this is the anchor point right here. We see a type A, and then we see a couple type Bs here with the price breaking the line and then holding above it with the close. And then what we had to do is use our projection to encompass the full scope of the actual trade. And then look what happened after. We saw the price now break, hold on the 4-hour at the lowest point of the projection, creating a type B touch, and then the bulls bought it back up, and it's currently sitting around 73.30. Now we also have two zones of sensitivity. These are the gray zones right here. And we have two key zones of supply and demand. So the key area of demand is going to be around 67, 66, even around 65 around here. And then the key level of supply is going to be $7,800 right around here. And then we have two zones of sensitivity around the $7,400 zone and then one at the $7,100 zone. And right now we are seeing a bit of a pinball happen where it's just in consolidation, we have a validated resistance and a validated support, and the price is just bouncing in between each other. So what could happen now is another push to the downside, like I said before, but until we see a break of this ascending zone and this zone of sensitivity, we're not really looking to enter shorts. It's getting squeezed from the top zone of sensitivity and the ascending support. And the apex is around here, has to make a decision. If it moves to the upside, yeah, we could capture potential profits on it, but I'm definitely being very, very cautious, really having my patience and not really taking much trades at this point because this is not a very trending market. And even if it's in consolidation, yes, you use shorts near the top and you long near the bottoms, but it's right now in a place that is a little bit difficult to trade in my opinion, and I like to stick to the smaller alts when Bitcoin is doing something like this. If we do see the price come back up here, yes, we could be potentially looking for shorts because we see it's a key level of supply and we can see that, but obviously we can see the price start to come up and then test this zone of descending supply. So right now, I'm not really looking to make a whole lot of moves on BTC. Now, if we do break this ascending support and this zone of sensitivity and then retest, so if we are able to break this zone and then retest as a new level of resistance, that could be a pretty optimal short trade with a pretty solid risk reward. We would have maybe a risk of 2% and an initial reward of maybe 3%. That would be looking pretty awesome. So that is a potential trade that we would be looking for. But the stars would really have to align. There'd have to be a lot of sell volume. We'd have to be seeing red basically throughout the entire market, on the main alts anyway. And then only then, when we see all the stars align, we would be looking to short. But until then, we're just taking back and enjoying the bit of the holidays, spending time with family, spending time with friends, and that's definitely important. No matter how hard you're grinding, no matter how hard you're hustling, I respect that immensely. You still have to have time for your loved ones, your family, and everyone in between that really means a lot to you, because obviously they will not live forever. So working hard is vital, hustling is vital, having grit, waking up every day and really grinding it out is very important. But what's equally as important is cultivating a quality community and being able to thrive psychologically due to the uplifting, positive environment that you create for yourself. So I'll make another podcast about that. But this is basically the Bitcoin update. I just wanted to talk about a bigger macro view of things because a lot of people are getting into very small, even looking at the daily, you can't exactly know where you're going to be looking at for the daily. You got to look at the bigger time frame, zoom out, zoom back years, not months. It's a different view of the market when you're looking back at it from a top of a mountain instead of looking at some sand on a beach. There's a very different picture that you're looking for, and that, for me, helps tremendously when trying to identify trends. So we won't even look at the weekly because there's no real action that's going to be taken. I've already kind of described what I'm looking for, and if you'd like to know more, and if you'd like to have more detail on what we're trading, as well as looking at the different alts that we do trade, take a look at our Discord. It's absolutely free to join. Yes, we do have a subscription service that allows us to educate individuals that want to learn how to trade in the cryptocurrency market. But if you are just an average guy just wanting to learn about something really to do with crypto, feel free to come in, absolutely free. We can answer all the questions you need in some parameters, and we'll be able to help you out as much as we can. So I hope you enjoyed the video, and until next time, happy trading.